Yo, 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 yo. Yeah, boy. Limit up, baby. Limit up. Gold, oil, Bitcoin, dollar, yen. Everything's on fire. Everything's awesome. Let's get her done. Let's go. Limit up, baby. Limit up. What? Woohoo! Limit up, baby. Limit up. What a great morning. G'day, mate. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm with Forex.Today. I'm also the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you're new to these webinars and you're interested in a broker that's investing into your future right now, think about it like that's their mental attitude. They want you to be a success. They want you to be a great client. The best clients are the ones that are stable, that can actually trade, that can be around for years and years and years. So they're like, hey man, why don't we invest into those people today so that they become a success, so that they become a more valuable client versus just opening an account, blowing it up and disappearing. So like, Wayne, can you help make people be more successful, more confident as a trader? Can you help them survive longer? Yeah, I can. So if you want someone that is investing into your success up front to be your trading partner, then you should consider TradersWay.com. Visit TradersWay.com, sign up for a demo account, then download MT4, place some trades. You'll see the execution speed, you'll see the swaps, you'll see the spreads, and you'll be very, very happy. Give them an opportunity to earn your loyalty and respect. So thank them for sponsoring Forex.Today. Awesome stuff going on in the world. If you need more resources than these free webinars, in the description below, I believe there's a link to my book. Sure, it's 13 years old or something, but it's a starting point. What else? There's a link to my chart templates. There's a link to Trader's Way. There's a link to FX Bootcamp if you want video training. If you want live performance coaching, then you go to live.fxbootcamp.com. There's a lot of resources available, all in the description below. Cool. So let's move on. Interesting. So, as you probably have read, there was a ginormous stock market decline, the worst since 1987. Awesome. 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 So, my wife and I were talking, sitting on the swing in the sun, enjoying the breeze off the lake. Beautifully warm day yesterday. And I said, honey, I'd like you to create a list of 10 stocks that you'd like to own. 10 companies that you like. 10 companies that you believe will be around in 10 or 20 years. And then we can discuss them. We can discuss the fundamentals of these companies, the fundamentals of their industries, and then also I can use technical analysis to confirm when to buy them. Cool. So that's a big crash yesterday. Now the market is limit up, which means money has poured in because the price was right. Now, we don't know if that's the actual bottom, but again, this is the conversations I'm having with my loved ones, right? This morning, we were talking, I said, look, it seems like the stock market is now down 25% from the top. Cool. And I said, in the financial crisis of 2008, when banks were failing, credit markets were failing, 10% unemployment in the United States. The stock market came down basically 50%. So somewhere between 25 and 50% will probably be the bottom. We don't really know yet, but it doesn't seem to be that bad yet. Maybe it will become that bad, but we don't have 10% unemployment. The credit markets are still flowing. There was a little bit of a sign of a credit problem yesterday, and that's why the Fed put in 1.5 trillion. So we're liquid. Okay, so that's cool. Right? We don't have 10% unemployment, all that kind of stuff. So somewhere between 25 50% is probably a bottom. Also, I was listening to Bloomberg Radio, and they had their Hong Kong, the president or the chief of the Hong Kong Bloomberg Bureau, and he said their office is filling up with workers again, and by their estimates from their surveys, China's about 80% back online. Okay? So what I'm saying is from the first of the year to now, Friday the 13th of March, what is that, 100 days? It's not even 100 days, but let's say it's 100 days. In 100 days from now, the United States should be normalizing. So if the stock market is also in front of the economy, because remember, the market and the economy are two different beasts, and the market is in front of the real economy, then 100 days from now is probably too late. So that's what I'm kind of getting to. And by the way, the swing trading group and I were talking about this yesterday. Like at some point, there's a buy, and the buy could be coming very soon. The buy could have been yesterday, and sure enough, we're limit up today. So yeah, I don't think it's the bottom, but it could be the bottom. Okay. Yeah, right. Well, Joe, but the thing is, people did quarantine and stuff. But another way of looking at it, in January, if you were in Hong Kong like Joe, you couldn't go, right? You couldn't go to the store and buy hand sanitizer because it was gobbled up. Everyone was prepping. Now you can go to the store, not a problem. You can get hand sanitizer. Everything's been restocked. The world hasn't ended, that kind of stuff. And I thought that was an interesting indicator. And right now, it's hard to get hand sanitizers in the United States. 100 days from now, it won't be a problem. So the economy is probably going to get worse, but we're more interested in the market than the economy. See what I'm saying? We have to be ahead of all of that. What's my take on it? If you like it, use it. By the way, as far as the cloud, it started with Japanese investors trading USD Japanese yen on the daily. I think people have moved it and used it at all time frames and all that kind of stuff. Now, I don't use it, but I'd always be cautious of using a tool differently than it was created for. Right? You probably could dig a ditch with an axe, but it may not be appropriate, right? So I don't know. So anyways, that's what I'm thinking about, guys. I am expressing my thoughts and my feelings and the conversations that I'm having with my loved ones, because you are also my loved ones, right? You are family. So this is what's going on here and in the McDonald household. This is what's going down, and I hope you appreciate that. Being above and beyond just me teaching you how to trade a 5-8 cross up. Okay? I'm bringing something personal to you. Now, what you do with it is up to you and your loved ones, okay? But that's what's going down here. Now, let's take a look at some interesting things. This is a very interesting for technical reasons, right? It's just, okay, cool. Isn't this interesting? Okay. Has oil stabilized? Maybe. Okay. Maybe. So will things get worse between Russia and Saudi Arabia? Maybe. Okay. All that kind of stuff. But maybe $30 is the number. Maybe $30 is the number. The double bottom says if you want to be a bull, you can be a bull now. Now, let's take the technical analysis a little further. What you need next is a breach, a pullback, and you're gone. Okay? Now, I suppose what's going to happen next is we'll have defaults on junk bonds. Because if you're a fracker, it's highly speculative. And you need a lot of money to drill or frack, let's say, a well. So someone's going to give you, let's say, $1 million up front. and then you squeeze the well and see if oil comes out. So, you know, it's not lending, it's riskier lending, let's say. So typically it's junk status, and I'll make up a number, 8%. These frackers would pay on a bond, where the rest of the market was paying 2%, right? So bond holders are being compensated for their risk. Well, bond holders have left the risk market, and there's a flight to safety, and 2% is now 0.8%, right? So this is now like 15%, okay? And here's the problem. You can pay the 15% if you have a 30% profit margin squeezing oil out of the ground, but what if your income is zero? Then 15% sucks on your debt that you've already acquired, right? And your income is zero because every barrel you pump right now costs you 45 bucks, right? And then you send it to the market and you sell it for 30, right? So that's a problem, right? You're not going to lose 50% on every barrel. So that could probably go down, but you know, all of that is normal. But that's also what Saudi Arabia wants. So this is a war on the frackers and the Russians. So the idea for Saudi Arabia is bankrupt all the frackers and screw over the Russians. Okay. Right? And of course, if you're Saudi, the head of the Saudi royal family, you can throw in a few family members into prison too at the same time. Really clean house. Yeah, why not, baby G? The thing is, that should already be priced in, right? So we talked about that actually a couple of weeks ago. And then I went through the Fed funds futures market and showed you that, what was it, 60% chance that was going to happen? So we're already there. Another thing I'd like to talk about, now we could use this gold as a model. We could use Eurodollar as another model. You know what? Let's use Eurodollar. Do I have Eurodollar here? Yeah. Let's use this as a model. Here's another sort of macroeconomics class. There was a point in time, not long ago, right around maybe the Fed original cut or before that, but the Eurodollar started taking off. Okay? Do you remember we went through the commitment of traders report and a bunch of stuff? Do you remember how I described why this was happening? Anybody? Euro carry trade collapsing. Correct. So once the market realized that you couldn't collect 2% on a 10-year T-note, that it was on its way down, and then when it really hit was when when the world realized, not us, but when the world started to believe there's a really good chance that they could only earn 1%, and then even less than 1%. So the carry trade was great if you're Europe and you earn negative 5%, let's say. It's not quite that, but let's say you earn negative 5% in Switzerland, or you were earning that in Euro banks, like in France or something. But you could take your money out, give it, right? So let's put that euro. Or you could put it in the United States and earn, 2% on the 10-year T-note in USD, right, in dollars. Plus, okay? So it worked out, it was way better, right? That's what a carry trade is. Once we realized that this was being destroyed by the central bank, okay? So now what? Now you'll notice that dollar weakened against gold and a bunch of other things, but now what's going on? Okay? Well, that money has come out of the market. Okay? This is the carry trade collapse. So we'll call this carry trade over. Okay? Now, Asia's coming back online, as we were discussing. So Bloomberg is estimating China's 80% back online. But maybe last week it was 70 and the week before it was 60. Okay, but it's been a couple of weeks now. So what's going on here? This is actually demand for the dollar. Because the USD is a reserve currency. We've talked about this a lot. Okay? But it's reserve currency. And when global trade is being conducted, it's almost always done in dollars. Okay? Almost always. So you could be two different businesses in Asia doing business together, but the contract is in dollars. So this is new demand or renewed demand, or let's say the normal demand is already there, but maybe the demand for dollars was not here. Why? Because China was shut down. Maybe think of it that way. Business in Asia was shut down. In China, in South Korea, business slowed down in Japan, all this kind of stuff. And there was no dollar demand because there was no business, right? No global trade was going on. Now, Asia's waking up. The tiger's woken up again. And there's renewed demand for the dollar. Isn't that interesting? So dollar weak with the death of the carry trade, but also lack of global trade. And now we've squeezed all the Europeans out. So they got their money back to Europe. Good job. That was actually the right thing to do. And now we got renewed business activity coming online in Asia and renewed demand for the dollar. No, this would be Asia demand first, right, Baby G? So isn't that interesting? This macroeconomic condition. I think it's interesting. Maybe you're not quite seeing the bigger picture, but what's happened here is we have a model that you don't see the complexity of in normal business activity. What's happened by taking all of China and then later all of Asia offline, you're pulling the model apart and you're seeing individual pieces. You're opening up, you're popping the hood on your car and you're taking the engine apart and going, oh, look at this. This is a valve cover and look at all those little valves. And how do those valves work? Well, let's pull those off and there's an engine and there's some pistons and let's pull that apart. Let's pull the pistons off. What do? Cool. What's down here? Oh, a crankshaft. That seems to be attached to those piston things. And they also seem to be doing something else by moving this crank. And this crank seems to be opening up those little valve things again. And you're like, oh my God, this is all neat. You're laying out the parts all over the ground and going, there's an interesting piston. These are valves. These are crankshafts and they're doing things. And how interesting is that? And then you put the engine all back together and it works again. This is a rare opportunity where we're pulling the global financial system apart and looking at the pieces. And within 100 days, it'll be back together again. Okay? Isn't that neat? That's how I look at it. So you're seeing the parts of, here's Euro bringing money home. Here's Asia coming back online. It's really interesting. Pretty soon, Asia will be back online too, and everyone else will be back online. Okay? So it's really cool. So that's what I see here. This isn't euro, this is dollar, and this is not the United States economic activity. This has to do more with Asia coming online. Well, but Carlos is back to the dollar dominance, but even the fact that it was weakening here and aggressively weakening shows its dominance. It always was dominant. You have to understand that maybe for 5 years people had been buying the dollar, and in 5 weeks it's all gone, right? They got out of those positions. But why were they buying it over the last 5 years? Why not buy something else? Okay. Well, because the dollar is dominant. And it's coming back because economic activity is returning. And so you can almost look at it now like there's a shortage of dollars sort of thing, right? There's a new demand for dollars. Okay? Interesting. Okay. So another interesting story here is, first of all, we've had Bitcoin coming down since 10,000. How many people would agree with that? Since Dow hit about 10,000, since Bitcoin's hit 10,000, we've had bearish trade plans, right? See, M3 to M1, right? M3 to M1. We've had this down. And so now it went from 10,000, right, to 4,000. Since I put Bitcoin into our daily routine. Alex was a bear from the top. Nice. Isn't that interesting? We're down $6,000 since I popped up Bitcoin in our daily routine, and I've only been saying down. Now, I learned something about this because I'm not a Bitcoin trader. Now, I've dabbled with it, right? Right? Like I said, I looked at it, something like, $150,000 or something worth it. But I don't, it's just dabbling, right? I did learn something from this because there's some proper analysis on this, right? There's some proper analysis on this. And I did learn that Bitcoin seems to be correlated with risk on. Okay? With the dollar sort of, with economic crisis, let's do it that way. With economic crisis, Bitcoin collapsed. It didn't act like a reserve currency, right? It's not like, oh my God, everyone get out of the dollar and everyone buy Bitcoin, real money, right? Fiat money is bad. It's all fake. Let's all put all our life savings into Bitcoin. It's on its way to $100,000, right? No, it took a dump. I mean, it was a dog with fleas. It just dropped 60% in 3 weeks. It's a dog with fleas. It's a dog with fleas. Now, you can give me your opinion. You're like, well, Wayne, fiat currencies and central banking and all this kind of stuff. Yeah, cool. I don't have an opinion. I just look at the market, and when things got complicated, Bitcoin collapsed. It ain't real. Sorry. Okay? Now, you might say, well, Wayne, the dollar weakens and will be worthless. But as I've explained to you, when the dollar weakens, it's because the market is being flooded with it because it's actively involved in global trade. The dollar weakens because Americans are rich and we're buying stuff from China and South Korea and Japan, for example, right? We're buying laptops, we're buying cars, we're buying TVs, we're buying cell phones. And that economic activity, as we send the dollars overseas, increases the amount of dollars in the global financial system. And it weakens because it all gets converted into those other local currencies. So we can buy from South Korea and Japan and all this kind of stuff. And it weakens because Americans are filthy, stinking rich, and the balance of trade makes it weak because things are good. So to say the dollar sucks because it's weak, you're kind of not understanding the whole money thing. So now when Bitcoin had a real opportunity to shine, and of course, you could argue, you're like, Wayne, it went from 3,000 to 10,000. Okay, cool. That may not actually be that good to be that strong that fast, but now we're down to 4,000, so it's still above the high. But if your trading account looked like this as far as results, no one would ever invest into you, ever. You're up 300%, down 200%. Or you're up 300%, down 250%. Right? And is the value being driven by global economic activity, actually, businesses and governments trading with each other? No. US dollar? Yeah. So right now, there's a Malaysian company negotiating a contract with a Japanese company, and they're doing the deal in dollars. They're pricing the deal in dollars, not Bitcoin. So anyways, and not euro. That's the other big thing. We were talking about the next reserve currency. I'm like, euro had a shot 10 years ago, and they screwed that up big time. So there is no other reserve currency for a very long time. I mean 50 to 100 years. Okay? When mainland China develops a legal system that foreigners will 100% trust, then maybe China will have a reserve currency. They also need an extremely liquid, deep, and mature bond market. Okay? But if you can't enforce a contract, right? So let's say you're an American business and you invest into China, and the company that you invested in screws you over. You need to be able to sue them and win. And if you don't think you can do that right now, whether it's true or not, if you don't think you can do that now, sue a Chinese company in China and win and get a legal verdict, then it ain't going to happen. So we're a long ways from that, I believe. Okay? Anyways. So whether you agree with me or not about reserve currencies, or whether you agree with me or not with Bitcoin, I'm just looking at the chart and telling you what it says to me. Okay? So you might believe Bitcoin is the future and stuff. All I'm saying is it didn't behave that way now. Maybe you're right. Maybe in the next financial crisis in 13 years. But it didn't shine. Okay? It didn't shine. If Bitcoin went from 3,000 to 10,000 to 25,000 right now, then maybe the conversation would be different. So far, everything behaved the way it should be. So cool. Those are just my observations. Those are not my opinions. Those are just my observations. Oh, why 13 years? I swore to Harvard I would never tell you. Members only, sorry. Anthony says, one empire will fall, another will rise. It's just a matter of time. Yes, I 100% agree. But that time isn't now, and it's not soon. Okay? But it will. It will happen, right? You're right. It will happen. And the Chinese might be shocked that it's going to be India, not China. Ed, they were limit up earlier. That was the first thing I said today. Limit up, limit up. Yeah, no, crypto. Well, blockchain to me is most interesting, Peter. So again, don't get sidetracked. Listen to my message. I'm not shooting down cryptos. I'm not shooting down Bitcoin. I'm analyzing the charts, and the charts say what they say. People behaved, right? It's not the technology and stuff. What did people do when they were tested. They dumped Bitcoin as fast as they could. Okay? That's that. There is no opinion. That's what happened. Okay? But does that shoot down crypto in general? Does that shoot down blockchain? Does that shoot down? No. That's just what happened. So don't, right? So if you're upset, if I've upsetted you, don't, right? If I upset you, don't get mad at me. Get mad at everyone that dumped Bitcoin. I didn't dump Bitcoin. I didn't dump it. People clearly did. So get mad at them if you wanted it to go up and it went down. It wasn't me, man. I didn't dump Bitcoin. Okay? Right? So that's that. So I'm just reading the charts, man. Just reading the charts. All right. Yeah, okay. So interesting time. We're limit up and we got upward movement. It's not technically bullish yet, but it might be the beginning. So what could we do here? Well, we still need to be solid technicians, right? We don't trade opinions. So it's interesting that on a Friday, we're risk on again. The market's already limit up. By the way, if you don't know what that means, there's circuit breakers in the financial system. The markets are only allowed to fall so much before the exchanges halt all trading. It's called like a cooling off period. Right? So if you're worried about what they're trying to do is stop panic. Okay? Panic. And I forget what the number is. What is it? 7%? 7.5%? But anyways, there's the exchange will just halt trading and say, you cannot sell anymore. We're limit down. And we'll open up tomorrow. Maybe people will calm down and all that kind of stuff. And maybe it won't be so bad tomorrow. Very often, a limit down is followed by a limit down. But at least there's circuit breakers, right? Now, we were limit down recently, right? But today, we're limit up. We're limit up. Not down. There were so many buyers that you're not allowed to buy anymore. Cool. So anyways, let's do our technical analysis. We are at the top of a bearish channel. So if it was going to regress, it should do it soon. Okay? That's what the channel tells us. There's the mean, and there's the negative and positive standard deviation of that mean. And we also can take this further and say if it were to turn bullish, like if you were a bull, you would probably look for something like this, don't you think? Then you got to take this and mark that, and let's do that. So we mark that up. And this is what you'd be thinking for the next 2 or 3 days. Okay? Still doesn't make you bullish, but that would be a solid, okay, a solid breach. Not a solid breach, a solid consolidation at the bottom. Okay? And for it to turn bullish, you would still need to get above that. So anyways, typically what I would do is I would do this. So you would get the down, and then you'd get the up. Okay? And then you'd get this, a future role reversal. Okay? And somewhere in here, you're going to get fib wars too. Just keep this in mind too. At some point, bears are going to want to re-enter. So there might be a big challenge here around 140 because there's roll reversals, there's psych levels, there's 618 levels. So, what should I do here? Actually, I'm going to update this and put it that way. And I think there's going to be a big battle around 140. So we might just consolidate 2 weeks from now around 140, like up and down and down and up and up. And, okay. Cool. Any questions or thought about that? This is if you believe the worst in the markets have happened. If it were to reverse here, it would probably behave that way, looking at what bulls would do and then bears would do and then bulls recover and what, and then, you know, sort of ping pong cause and effect. Where would a bull buy? Where would a bear sell? Where would a bull buy? Where would a bear sell? What is the price action? Where are the levels? Where's the resistance? Okay. That's if you're a bear. I mean, if you're a bull. Bears, we already know they're going to take this down. That's what the texts tell us, not opinion. Okay, and if so, they're just going to take it down here. So both bulls and bears need this to come down a little bit today. Well, the repo got $1.5 trillion yesterday. Skupinlewski, right? So 1.5 trillion is probably good. Okay. No, King, limit up means the exchange put a halt to trading because they're worried about irrational exuberance. It's a cooling off period. Sold gold, euro, yen, pound. So you're all in. Hope that is. Well, you're in. You're in. So I hope it works out, Hope. I hate for people to sell at the bottom. So again, there's going to be a learning experience there, Hope, right? So I don't know the future. So maybe it works out, maybe it doesn't. But make sure you observe it as intellectually as possible. Take notes about how you feel. Take notes about what's happening. Take notes about new news that comes out and how the market responds. Oh, you mean you took the profit? Okay, good. I thought you just got in. So you're getting out of everything you sold. That's cool. Because I'll continue my thought process, guys. This is an opportunity for you to observe. Because this is going to happen again in the future. It's not normal, right? But it will happen again. And I want you to make sure, first of all, you're not just like freaking out trying to get rich quick, doing all the old. You don't want to trade like the old you. Your old you as a trader should be dead. Okay? But I want you to look at this as an educational experience of the difference between the market and the economy. The economy isn't that bad yet. Right? There isn't much economic change currently in the numbers. It's all speculation of how bad things will be. But I just flew to New York and there was no difference, right? So you got to look at where are we now in the market. We've had a 25% decline in the stock market, and nothing truly bad has happened in the United States yet. But by the way, the stock market was probably 30% overvalued, right? It probably still needs to come down just to get back to a rational number, right? So it was stupid before. This is a better price. So that's why, like I said earlier, my family and I have sat down and we're talking about things we want to buy. Cool. So things will economically get worse in the United States over the next 3 to 6 months. We'll see worse numbers and then recovery numbers. But the market will always be different than the actual economy, right? So try to separate them as much as possible, and then learn from your observations, because that's all I had in the beginning. I had to learn from observations. I had to challenge myself by asking why. What's going on here? Why? Why? Okay? So, like, for example, we had an amazing non-farm payrolls 2 weeks ago, and the stock market's down 25%. Why? Because we had an awesome non-farm payrolls? You see the difference there? Yeah, so by the way, in the United States of America, my children's school has been shut. They closed it. My kids are at home right now. They're not going to school for 2 weeks. All classes have been canceled. You don't go to school at all. Then they go back. Here's the story. They haven't officially announced it yet, but I know people. Anyways, what is talked about now is they'll shut for 2 weeks. Then they'll go back to school for 1 week. And then there's spring break. And they're off for another week. Now, what will probably happen, that's what's in the cards now, but what will probably happen is classes will be canceled for all 3 weeks plus spring break. So basically 1 month away from school. Now, here's the problem. What if I had a job? What if there was no parent here? Well, have any healthy children died of COVID-19? But I don't know. So whatever, it doesn't matter what I think. That's what's going down. So yeah, that's what's going down. So we'll see. Almost always humans make things worse. So we'll see. What used to happen in America and in Canada, if your kid got chicken pox, you'd have a chicken pox party. And all the moms would come over to your house for a play date, and you would try to give your kid chicken pox. So you could just get all the kids together on purpose and give everybody COVID-19. Be done with it. Your immune system gets strong and you move on. Remember, there's no cure for the flu either. Ryan Carter says they're doing classes online. Well, Harvard is doing classes online. I've missed your first comment. University of Georgia. Yeah. So Harvard on Monday closed all the classes for Harvard College, Harvard Law School, Harvard Business School, Harvard Medical School, Harvard Engineering School, so on and so forth. But the classes go on, but they're all online. The classrooms have been shut. So that's what Harvard did. President Bacow mentioned, I think it was Monday. It might have been Tuesday. It was Tuesday. I was in New York. So anyways, so that went down. But here, I don't know if a Georgia public school teacher knows how to use WebEx or Zoom. So forget that. No, I don't think Ghana has Ebola parties. No. All right. So gold, here's that big range we were talking about. Amazing. So it's funny, like when I do this analysis, I just do what the charts say. Like the charts tell me the prices, right? But the charts typically don't tell me the timing of things, and that's why you have to do your work. But it's amazing when we're talking about up ranges and down ranges, and it happens in days. What could take weeks happens in days. Oh yeah, you're in Georgia, huh? Yep. So anyways, there's that. So if you're using text here, technical analysis, this will say a breach up to the 55 and then probably down and then probably back up. Gold is bearish at the moment. The thing is, if you sold it off to 21, you did the right thing. But selling off to 21 is a trend. That's a trend trade, right? But I have this set up for you guys as a range. So the way you trade a range is you don't assume 21 down. Okay? You assume this. Okay? You're a seller at the top, you're a buyer at the bottom. Okay? And you can see that that's what people are doing. This is just a 1, 2, 3. Pretty easy, pretty common pattern. So the next step to that is up to the 55, then a significant pullback or a double bottom. Okay? And whatever scenario occurs, you're on your way back here. Okay? Now, if it breaches below, then you can trade it as a trend. But you can't assume that. I mean, you can. It's foolish, but you can, right? So this is not a trend, no matter how you look at it. Look at this. It's just obvious, guys. Come on, right? So what I teach you to do is assume it's going to be range bound forever. But, okay, so if you sold here, you take profit here, and you might even buy it here and take profit here, and then you might even sell it here, okay? But there might come a time where it does this, in which case you sell here, okay? If it does this, but you don't predict that it will. So you don't sell here and hope to God you're down here. No. You get out here. You do your job. Oh, yeah, you're talking about sawgrass? Yeah, actually, I know someone who's a wealth manager. He has like $300 million. And he was taking some clients, and they actually were there. I think they were actually driving, maybe even yesterday. Yeah, they turned around. So it's interesting that's canceled. Yeah. Cool. So at least you know what to do, guys. At least you can take care of yourself. Most people are not in a situation to take advantage of these amazing moves. Golf tournament. What is it called? The Players? It's at Sawgrass. It's south of Jacksonville on your way to St. Augustine. So cool. Don't get caught up on the headlines. Like what most people will say is, oh my God, the NBA, oh my God, March Madness, oh my God. And meanwhile, you should just be saying, oh my God, I'm crushing this Eurodollar and I'm doing awesome. This is amazing. I'm killing it. Let everyone else worry about all those other silly things. You need to be making money. Okay? Markets are good. You shouldn't be panicking. You shouldn't be over trading. You should be doing your job. I've taught you well for years and years and years and years. You do things like, right, lower low, lower high, sell. Lower low, lower high, sell. Lower low, lower high, sell. I mean, come on, right? You need to be just destroying this. Okay? You understand? And it's not that complicated. Now, I think many of you guys are probably over trading and you're finding ways to lose money. You're inventing new ways of losing money by trading like you used to, going back to old habits, freaking out, fear of missing out, trade, trade, trade. It's bullish, it's bearish, it's bearish, it's bullish, it's all over the place. If you just do what I teach you to do. So for example, this is straight out of the day trading course. If you took the day trading course, you're probably doing amazingly well. You should be doing amazingly well. Okay? You have these tools, you have the knowledge, you should be calm, you should be focused, you should be planning tomorrow's trades already. See, like in the swing trading group yesterday, we had all of this. We saw this low, and we know how to trade it. And our sell zone was right there, not a problem. Easy, straightforward trade. Done. Next. Okay? If you plan your trades versus logging into your chart. So some of you might be doing this. You're on a 5-minute chart and you're making 27 decisions a day. Where the swing trading group, we were actually lower, but we said, yeah, we're going to sell in here, and you're done for the entire day. Sold, done. How'd you do today? Well, the day's not over yet. I could probably do better. But some other people, you might be on 27 trades here, and my fear is you lose money in a situation like this, where all you need is a projected sell zone. This is the sell zone. Lower low, lower high. Here's a second sell. Here's a third sell. And that's all you need to be doing. No panic, no craziness, no in and out, up and down, 27 pips here, negative 33 pips there. Just a sell, and a sell. And you'll make 300 pips today. Nice and easy. Okay? But Baby G says lots of choppy price action only if you're stuck in the super small time frames. All of this was planned out yesterday. You understand that? This was casually planned out yesterday. Here's the casual plan. We had a sell zone the day before. This is where we were doing the swing trading group. And we said, okay, well, here's the next swing. Then you're like, what else is here? You got this, you got a psychological level right here, right? So we know this is our real zone. You could even use Fibonacci, but there was like 9 reasons why you would casually sell this around the London Open. It would fade during Asia, sell it in London before the London Open, and you're done. This plan takes about 2 minutes to do. But meanwhile, I think what happens is, without planning, you get caught in here and it's down, it's up, it's down, it's up, it's down, and somehow you lose money. Somehow you find a way to lose money. And don't get mad at me because we've all been there. I'm just trying to show you that this is all that's happening. So why is it so complicated? You're either not following the rules of engagement or you're going back to the way you used to trade. But you're supposed to be learning here. You're supposed to be changing your behavior. This is a test. You either have patience and discipline or you don't have patience and discipline. You cannot be mostly disciplined, then the market wakes up and you get eaten by the tiger. You're like, I'm good if the market's not doing anything. Whoa, 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 whoa. So these are your tests, so to speak, right? This is your test of, are you patient and disciplined, and do you plan your trades in advance? All you had to do was sell here. Look, even the tool tells me, we saw this price yesterday. We're like, oh yeah, it's going to rise up, we're going to sell it. Remember this whole idea that bears need bulls to drive this up so they can sell it. And then you get the exact price. 112 and some change. In your fib zone. In a lower high with price action. With daily pivots. And even the time of day, it's predicted that that's what's going to happen. Ciao. Done. So if you spent if you've been trading in the market now for 7 hours straight and you haven't made a ton of money, you're doing it wrong. That's all. It's not a criticism. It's not an insult. I'm just saying, you're not doing it wrong. You should change your behavior very, very quickly before you completely miss out. Okay? Boring. So again, if you took the day trading course, you know all of this. This is what the day trading course predicted. Up, sell. Up, sell. Up, sell. How many people here have done the day trading course and confirm this is exactly the type of stuff you learned? Can anyone here confirm? Did you pay the money? Did you take the course? Did you learn this? Joel says, me. Jim, absolutely. Yeah, Jean-Yi, me. Goose, me. Right? Joel, yeah, that's what he learned. Dwayne, yup. So in a weird way, even though this is really volatile and stuff, you should be doing well. And you shouldn't be panicking. You shouldn't be overtrading. You shouldn't be overstressed. You shouldn't be staring at your charts 19 hours a day. Okay? These are our pre-made sell zones, Anthony. See this, Anthony? That's tomorrow's sell zone. That's what we're going to do tomorrow. Not now. There'll probably be a lower low, and this will adjust. So maybe by the end of the day, we'll have a sell zone here. And price will be way low. We'll be at like 1905 or something. Okay? But when we were trading, for example, when we were here, we already knew up here was our sell. When we were trading here, we already knew up here was our sell. When we were trading here yesterday during the swing trading group, we're like, what do we know? What do we know? Well, we need it to go up so we can sell it. Where are we going to sell it? How about around 112,000? Okay, good. What other numbers do we have there that might be important? Well, we got a pivot up here. We got some price action here. We got a fib over here and here. So we know all of this area is going to be our sell zone. And the only way you can lose money is if the entire market reverses, which in a trend is not likely. Right? Not likely. Prince Philip says tomorrow. Well, tomorrow, the next trading period. Okay. So, if you're missing it, guys, this is a testament that all you, I think, are missing is maybe a little bit of knowledge. Okay? And maybe it's telling you your gut instinct, or maybe if you're winging it, it's not the right way. That you're just missing a little bit of polishing. Right? Right? That's it. Maybe consider taking the swing trading course and get the day trading course for free. Maybe consider doing that. It's not a lot of money. Okay? So I recorded it because people needed it, and now people are benefiting from it. It's just like that. Cause and effect. Okay? Right on, Roger. It's the thing. It's only knowledge, guys, right? You can figure it out on your own. But it might be costing you a ton of money right now on the opportunities that you're missing. Anthony's like, oh, trust me, Wayne, I took that trade. Awesome. That's what I like to hear. Okay? So let's take a look at some of this change in direction. So Euro was straight down for days and days and days. This is different. So what do we know? There's something else going on. And it might have to do with the Japanese yen being different than the US dollar. Cool. Okay. Right now, there's demand for dollars to do business. Great. But what about Japanese yen? Well, if there's an increase in business activity that demands dollar because of trade, there's also a trade financing issue. When trades are being financed, there's yen is involved, either directly or indirectly. But nonetheless, you can think of it as that way, even if it's not quite reality. You can think of it that way. So business, an increase in international trade should weaken the Japanese yen. Okay. We also know that these are very logical, intelligent numbers. This 63.93. So notice it wasn't 64. You notice that? It's not like it came down to 64 and it was a psych level. These were very specific prices based on monthly pivots. So once again, this proves if you don't have monthly pivots, you're missing a ginormous tool that obviously market participants use. So if you're trading without them, you're somewhat trading blind. Everyone else has a GPS. They don't get lost. You're like, I don't believe in GPSs. Oh, really? Yeah, I like to use the stars and I like to use my sextant. All right. Good job, man. Okay. Maybe consider pivots. But anyways, this seems pretty logical. Okay. So now what? Does this mean bullish? Not quite yet. So we had this drawn yesterday in the swing trading group. We're like, okay, this is interesting. And this is our prices. And remember, this was down yesterday. But we were talking about what would make you bullish. Well, the first one is the double bottom. The second one is the breach and the replay, right? And this is interesting, but this is a change in direction. So this is just like consolidation, okay, which is important. But then a break, pullback, is actually a change of trend. Okay? So is this a bottom? Well, this is also at this period, me sitting down with my wife saying, give me a list of 10 stocks. We'll discuss them fundamentally as well as technically. Give me a list of 10 stocks you think you'd like to own. So for example, should we buy Disney? I'm like, whoa, that's a good one. Let's talk about that. Well, their parks are going to be shut down. Their cruises are going to be shut down. Cruises, right? But they have amazing media. First of all, they now have Disney Plus, right? What else do they own? What's the one my wife watches? Not Netflix. What's the other one? The one where they just do reality TV shows. Man, I was a beta tester for it. What do you call it? What do you call it? Not Netflix. The other one. What is it? The one where it's just all TV shows. It's just like yesterday's reality show crap. Hulu, thank you. It's funny because I was a Hulu beta tester, so you'd think I'd know. So anyways, they're a majority or major shareholder of Hulu, and they bought ESPN. So think of this now. They're going after Netflix. They have access to daytime TV, not just movies. Plus, they got the family angle. It's not just movies, it's movies and family stuff. So they already have the content. They don't have to lease it from somebody else. They already own it. Then Hulu, so now they got television. ESPN, they have sports. Holy crapola. So that's going to do well if we're quarantined for the next month. Agreed? But in 10 years, will Disneyland and Disney World around the planet, will Euro Disney still be around? Shanghai has Disney, Hong Kong has Disney. Like, will these parks be back in play? Yeah, I'd say probably. Will cruises recover? I think cruises are going to have a tough time because people got sick and died on cruises here. And that's not going away anytime soon. So now there's going to be a fear of going on a cruise. But what's going to happen is those cruises, if they do get going, let's say you're not allowed to go on cruises in the United States, so they go to Latin America, and now the Southern Hemisphere is going to get crushed, right? With their COVID-19. So, So I don't know, but I don't think the cruise industry is that big for, I mean, the Disney cruise is great. So I've only ever been on one cruise, and it was the Disney cruise. And I got the second largest room on the ship. There's the Walt Disney room, and then there's the other room. So we had multiple bedrooms. I think it was 2 full baths, 1 half bath, a living room, a dining room for 8 people. It was nice. It wasn't as nice as I expected, and it was very, very expensive. Could have been nicer, actually. So I've never been on another cruise, but you know, that ship to not be sailing, well, it still costs money, right? So anyways, when do people trust getting on cruises? See, like Disney World is in Orlando, Florida. It doesn't travel to Australia and get COVID-19, right? So it's interesting when the Northern Hemisphere recovers and trust comes back, and Europeans are allowed to visit, they can go to Disney World and go to Florida, right? In the middle of the UK winter. That'll work out. But the Disney cruise is interesting because I don't think it can escape. Right? I don't think you can escape it because wherever you go, you're going to get it. So anyway, so that might take longer, but maybe I buy Disney princess cruises or something later. But so anyways, so this is what the first one my wife said, well, how about this one? So I could take a look at it. We can make some educated guesses and say, well, this will benefit when everyone's locked at home. Men are going to watch ESPN. Women are going to watch reality TV, right? So sports, right? Men watch sports. Women watch reality TV and reruns of Dancing with the Stars. I know I'm being incredibly sexist, but you know it's true. And then Disney Plus, the kids are going to watch Disney. So that would be a big winner right away. So if I can get the right price on Disney Plus, I might consider it. Oh, there's no sports to watch? Yeah, but this is where you watch reruns and stuff. It doesn't matter. Men will watch it. Okay. So anyways, thought process, right? Difference between the market and the economy. Yeah, men will just watch, X Games from 2016. You're like, the 2016 X Games? Oh my God, I gotta watch this. I'm more of a YouTuber. I'll just watch fail. I'll watch Fail Army for hours. Okay. All right. So, you already know what to do. You already know what to do. So I want to remind you that I'm here today to tell you this is a test. This has been a test for the last week. I want you to think about how you behaved this week, Monday through Friday, as a trader. And then I want you to ask yourself tough personal questions like you're asking yourself. So why don't you take the time to really think and really be honest and really be open, maybe write things down. But you've had a test as a trader and you want to be a professional trader in the sense of this is your career, or maybe one day you want to trade other people's money, but even if you don't want to trade other people's money, you still want to make money, right? And these are really good market conditions. And they're not usual. They're not normal. I'm not saying that, but they will happen again. And I think yesterday there was a lot of language like, this is weird. Markets are crazy. You can't, one guy even said you can't make money. I'm like, holy shite, right? Like, what? That is nonsense. Complete rubbish to even to think it, but then to type it out in a webinar. That's like ridiculously baloney. Okay? So I want you to go back in time and analyze these markets over the last week. Ask yourself, what should you have done? What could you have done? Okay? If you don't ask yourself these things, you're never going to improve. I'm sorry, you're not doing anything. You're just going to the driving range and hitting buckets of balls and slicing every single one of them. Okay? Or maybe at best, slice, 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 hook, slice, 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 top, slice, 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 top, slice, 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 hook. But you're not getting better as a golfer. Same thing as a trader. Like, you need to stop and think. You need to stop and analyze. And some of it is, or maybe most of it, if you know basic technical analysis, then most of it is asking yourself these tough questions. Did you behave the way that you expected? Are you truly planning your trades hours and days in advance? Are you seriously? Did you plan today's trade yesterday? If you did, it was easy. I'm sorry. If you planned today's trade yesterday, it was not complicated. It was a 50% retracement into a psychological level at a role reversal in a downward trend. Asia fade it, drop a lot, pop a stop, go to bed, wake up 4 hours later, and you're up 110 pips. Because you had a plan, you sold a rally in a downtrend. Guys, don't behave like you used to. Don't drop into the trader you were 5 years ago or 3 years ago or 3 months ago. This is where you're supposed to step up and do the job and do it well and develop that courage and strength that you've been trying to, or that you envision you'll have. Like, how many speeches have I given about you thinking about the trader you want to be? Right? Do you guys remember that? I said it only takes 22 seconds. And maybe that's one of the benefits of this daily webinar is you log in, you're like, he reminds me of what I want to do, who I want to become, where I want to go. Right? Well, this is now, you're in the midst of a test. Good luck, man. It's midterms. You're like, oh my God, I didn't even realize it was midterms. Right? You're in a real test, but are you behaving the way you told yourself you were going to behave? Are you becoming the trader you want to become? Okay? Or are you missing it? Okay? This is just the wake-up call, guys. This is just the wake-up call. That's not difficult trading. That's not difficult trading at all, right? So like let's do price action. Okay, let's do price action. Lower low. Oops, that's pretty fat. So I've taught you to look left, drag it across. Oops, that's supposed to be a straight line, sorry. Drag it across. There's your new sell zone. Up, 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 up. Sell. Okay? This one's actually not much of a new, right? But what you would do is you take this old support, drag it across. Somewhere there is your new sell. Down, 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 down. Okay? Take this, drag it across. Okay? Now, this is weird because it's such a big move. So you could also use fibs, which we did. 382, 50%, 618. You can use psych levels, 12.0. But nonetheless, higher high is a higher low in a downtrend. Pretty straightforward, pretty straightforward, pretty straightforward. But if you find you're in the middle of panic, and let's say you lost money in here, or you kept selling here, you may not have been following the rules of engagement that I've taught you over 15 years of doing these webinars. Okay? Right? If you took that day trading course, it actually says up and down. Not because of this tool and stuff. Okay? Because there's humans. The London boys. So if you get your stuff together, if you get the knowledge, okay? Take the classes, get the knowledge, go to Harvard, you can, right? But you can still come out, if you don't learn, if you don't use your knowledge, it doesn't matter if you have a Harvard degree. Okay? If I said something like that, Heath, it would be from the idea that you were a bull. Okay? And the bull, it would have been down here. Okay? If you were a bull, then that was your buy if you were in there, and you were probably a buyer here, which means about 2 hours into London Open, you would have got knocked out. Okay? This is very bearish. Okay? And it's like one of these things, Heath, if you're a bear now, you'll be a bear on Monday. Currently, based on price, we're looking at this area as being the bear sell zone, but most likely we'll get a lower low. We don't know if we will, but most likely we will. And this will adjust along the way. And maybe by Monday, you'll be looking at this as a sell zone if you're a bear. Now, if you were a bull in here and this was your buy zone, okay, you bought pre-London, oh, okay, you would have bought there. You would have got knocked out now. Now, as a bull, you'd be looking at, okay, how about this double bottom? Okay, 111 looks a little too high, 110 looks a little low, so you're thinking about your zone, okay, Heath? So your zone, if you were a bull, would be 110.50 to 111, okay? And you would change your chart, so you'll see that there's probably an overlap just above that currently, right? Currently, the buy zone is here, okay? So you would probably assume it would double bottom. It would come down 50 more pips, 70 more pips, and then you'd find yourself doing this, okay? But that's your bias. So the interesting thing about the setup, now often I do the setup by just changing the template, right? But here's how that indicator actually works, okay? So I got to go to indicator list. Here's my biased pivots, okay? And I have to tell it, I'm a bull. So if you're a bull, you got to say, okay, indicator, I'm a bull. Tell me my prices. Okay? So you can see that was the price yesterday if you were a bull yesterday. Okay? Now, I find it very difficult to have something like this make me bullish. But that's me. Okay? Especially since the day before got blown out, and the day before got blown out, and the day before that got blown out. Seems very difficult to me to be a bull until you have a reversal pattern. So you also have to put that in there. Okay? You also have to put that in there, Heath. So before, and I'm sure I said something similar, before I can be a bull, I need the respect of the bullishness. I need other bulls to be in. So I would never in a million years buy this. Probably wouldn't buy this. This would be interesting. This confirms it. And this would be the buy, Heath. Okay? So you have to understand you must make your bias and confirm your bias. So if I had said something like that, we were talking about biases. And then you have to confirm or deny the market conditions for the biases. And how to confirm that market, a buy would need a double bottom higher high 1, 2, 3 before it is technically a change in trend. So we talked about that on a different pair as well, where it can become a double bottom higher high. I think it was one of the yen pairs, right? Maybe it was pound yen. I'm like, okay, we have the double bottom forming on exactly the right price for that. It was a monthly S2. Okay, so the next thing is the higher high, higher low is what you need to confirm those market conditions. Doesn't mean you buy. Okay, so most likely you're a bear on this. I would assume you guys are bears. Okay, doesn't mean Monday's going to be bearish too. No, but that's why you do your analysis. Okay, that's why we don't sell here. That's why we don't sell here. That's why we don't sell here or here. But yesterday you could have sold early. This is more of a front run. That's more of a swing trade than a day trade. But this move here is the day trade. Okay? Only if you're a bear though. Right, Heath? Only if you're a bear. If you weren't a bear, you wouldn't have been looking for that, Heath. You would have been looking for the opposite. You would have been looking for this. But you have to, that isn't the pattern I think you should be looking for in these terms. If something's clearly been bearish, before you become a bull, it needs to consolidate and do a change in direction. So in a scenario like this, even if you were a bull, the first entry isn't till here in the pattern. So right now, this is a big up off of a big bottom. This to me isn't necessarily a buy. You could do it, but you're too early because we don't even have a double bottom yet. Okay? And to me, this bottom is just the same as this bottom and this bottom. So I never look for V-shaped reversals and all that kind of stuff. So you'll always hear from me, Heath, that if you have awesome support, what I call support so obvious a blind man can see it, okay? Then the next step is to confirm it, which is a double bottom. You can trade the double bottom. It's early and it's aggressive. You can do it. But I always prefer the higher high, higher low. And I prefer this pattern so much, we have a secret word for it. What is the secret word? Max, no. If your bearish zone gets blown through, do I switch my pivots? No, because my pivots are based on my bias. If you do that, Max, you don't have a bias. Yes, guys, thank you. Hammock. Okay, Heath? So it's very, very important that you understand. I think what's happening is you misunderstood what I said. You missed a piece there. You have to understand what I'm saying. Okay? So if you're a bull, you shouldn't really be trading until at least the double bottom on obvious support. And then really, if I were me, I would caution you and say, go small here and then wait for the higher high. And when you got the higher high off the double bottom, then now you got the higher low, roll reversal 1, 2, 3. Okay? Bomb, bomb, otherwise known as hammock. But I always recommend that you're not the first person in. I don't believe in a first mover advantage. I only teach that there's a first mover disadvantage. You should never pick the bottom. I actually said the joke again in the swing trading group yesterday. I said, you don't want to have a strategy of picking bottoms, because that strategy stinks. Now think about it. It's funny. It's crude. It's crude, but it's right. You don't want to have a strategy of picking bottoms because it stinks. So instead, look for confirmation. Okay? Look for confirmation. And by the way, I'm reminding you guys here in the free webinar, we spent most of the swing trading group focused on the psychology of the trading and sticking with plans and sticking with biases and using technical analysis and listening to the news less and paying more attention to the charts and all these different things. Trading is a psychological challenge, so I'm constantly trying to remind you that you know what to do. Prince says, would you increase position size? Never. But you can add. So think of it this way, Prince. Okay? Let's say you bet 10% of your trading account on one idea. Well, not a good idea, but let's say you do it. Okay? And then you're up 100 pips. Okay, great. Which means you just doubled your account, but whatever. Okay? Cool. How much of your account is available for trading? What is your available margin? That's right, King. King's nailed it. Bears should sell a lot in a downtrend, and bulls should not buy much in a downtrend, and vice versa. How much available margin? Because you'll see it right on your MT4, right? It'll tell you. How much available margin do you have? You just dropped 10% of your entire account. Is it 90% available margin? Type in a question mark if you have no idea what I'm talking about. Yeah, 100%. You have all your money. Right? You've earned your 10% back. Okay? So going back to Prince's question, he's like, hey, once you get this confirmation, do you jack your lot size? No. Because if you buy the dip, so let's say now it drops 50% from the top. So you get a 50% Fibonacci retracement. So now you only have 50 pips, right? Now you're only up 50 pips. So 50% of your profit, floating profit left. How much available margin do you have if you're going to buy a 50% retracement? So now you bought here, you're up 100 pips. Now you're only up 50 pips, and you're going to add a second one, role reversal Fibonacci. So you're going to add a new trade, but how much capital do you have available? What's your, right? No. You still have 100%. You still have 100%. Because you're up 50%. You still have 100% available margin. So put it this way to answer Prince's question, if you're patient enough, you're sacrificing this much, but the thing is now you have two trades, one is like free. Now you can't have 150%. You only, because here's the thing, guys, this is money, and it's not just 50%, it's money. And that money is already in your account. So you can't have 150%. You just have more money in your account than your margin cost you. Okay? So let's just say it cost you 10% to get in, but you're still up 50%. So you have more money now than you had, including your margin. So you have 100% of your trading account to trade. So now entering this one is kind of like free. Okay? So instead of just saying, right, instead of dropping 10%, let's dumb it down now. And of course, I'm being ridiculous because you'd never even drop 5%. You shouldn't even drop 1% on your account. But anyways, if you did, instead of doing 10% one shot, let's say you did 5% on a double bottom, 5% on a higher low, okay? And then you're up here, you have your complete 10% of your account in the market and you have 0% risk because you got this at a stop, you got this at a stop, and you got your margin back. So you have 100% of your, right? You have zero risk and you have that full boom, okay? No, I know what you're saying, but you don't really have, don't think of it as 150. Just think of it as, well, I guess you could, because they're both profitable and that's in your account, but it's not really, it's not, well, it's not, that's your new number of margin, of account, right? That's your assets under management. But I guess you could look at it and say relative to where you were before, but it wouldn't be 50% because that shouldn't add up to 50% of your account and all that kind of stuff. But on that individual trade, but you're kind of mixing it. But the idea though, right? The idea though is still there. You have your entire account available. You don't want to go big on one trade, which is kind of what Prince is asking. Like once you got like this hammock, do you go big on it because you're so certain and you're so confident? No, never be certain, never be confident. Always be shy. Always do the work, right? So I'd rather you do like 1%, 1%, 1%, 1%, and then get to a target. You have 1, 2, 3, 4%, right? Risk, but you have actual zero risk because you're break even, breaking, right? I always want you to get to a situation where you're removing risk. So like when I've had like, let's say over 100 trades open, okay? When I'm in a situation where I have 100 trades open, I'm risking zero. So every day is a new day. So it's never actually zero, but it's like, I'm at like 99.8% because the only thing I'm risking is today's trades that are not break even yet. I'm not risking last week's trades or last month's trades. Those are all break even. Stops are set. Worst case scenario, I make money, right? These might be plus 500 pip trades. If I get knocked out, I'm disappointed I only made 500 pips, but there's no risk. So the only risk I have is today's trades. And if I lose them, we know, like, let's say on a basic model, let's say I'm risking 33 pips and my standard stop is 99. Typically, actually, my standard stop is 333. I'm risking 33 every time. My limit is at 333, but the idea is I don't expect 333. I just don't want to get out of my winning trades. And if it gets to be plus 333, I have time to make decisions of whether I move my stop to 555. Okay? I'm weird that way. So I actually use those numbers, right? The idea is get in good trades and let them run forever. And if they're bad trades, take a 33 pip stop. Okay? So are you ever confident to go in big? Never. Okay? Okay? Never. I'm never that confident. I just look at it as a job. Okay? For example, if I sold in here and I lost money up here, that was a good loss. Good loss. Why? Because what's likely to happen next is this. So if I was a bear, this is a good loss. Because I want to sell the heck out of this all day, every day. I just don't want to take the risk. I don't want much risk. But if I'm wrong, I'm wrong. Okay? Okay? But again, if you're missing this, guys, take the day trading course. Or just take it. Just do it. Just take it. Swing.fxbootcamp.com. You'll get swing trading and day trading. You need to know that. I'm like, oh my God, you're going to need to know that. And the subtleties of things going on, like, is Eurodollar and pound yen the same? No, look at the difference in analysis. And you're going to need to know the differences and what they mean and what they're telling you. Okay? And that's why today we had the story of the US dollar is telling me about global trade. And the JPY, is also telling me about global trade. Same story, same plot, they're different trades. Okay? Same everything, but you don't do the same thing on each. They're similar and they're different. It's the same underlying theme, all that kind of stuff, but they end up going different. They do different things for their uniqueness, and that is a bigger thing. That's why I started with it today. I just want to give you a taste of the intricacies of macroeconomics, but also the fabulous situation we're in right now, because it's all been pulled apart and you can see all the pieces. It's like, it's like turning the Panerai around and you see inside the watch and you're like, oh my God. I guess you can't see with the light, but you're like, oh my God, those gears and those wheels and those weights, amazing, right? But you didn't notice that before because you're always just looking at the numbers. You're like, oh, okay. So now we've pulled the watch apart and there's these gears and sprockets and weights and counterweights and springs and, right? This is the 3-day, I think, right? It's only the 3-day. I can't even read it anymore. Is it the 3-day? I can't remember. I think the 6-day was like twice as much. I forget it. But anyways, this is a unique opportunity to look inside the clock and see all the parts and appreciate what each piece does. And very soon it'll all come back together again and you won't be able to look inside. So very, very, very good opportunity to learn. Okay? Let me leave with one other thought. I've asked you multiple times today and many times recently, you need to sit down and talk with yourself. You need to sit down and analyze your trading. I need you to go back, look at the charts over the last 5 trading days and ask yourself very difficult questions. Did you behave the way you wanted to? Or you expected you would? Did you set your trades up in advance, or were you reactionary? Did you display patience and discipline? Did you do as well as you should have done? Did you, there's all these big questions, and it's not good or bad, just be honest. Okay? Sit down, think about it. Take a pen and a pad, okay? And write it down. Maybe grade yourself. I don't know. And then remind yourself of the way you want to behave if it wasn't similar. And then behave that way next week. This could be the most important week of your trading career. You either change your old behavior and discard it forever, okay? Or you don't. You either step up and be the trader you want to be, or you keep dreaming. Okay? So take the time. Honestly, take the time. If you don't, I really don't. I don't know why. I just don't know why if you don't. Right? This is really, really, really important for you to grow intellectually, mentally, emotionally as a trader. Okay? You really need to open up, talk to yourself, and be critical with yourself in a way that will make you a better trader. Okay? I hope you do it. I hope you do it. So have a wonderful weekend. I hope you take the time. I hope you challenge yourself. I hope you step up and grow. Oh, you would never look at lira until we're risk on again, Prince. I don't, okay? We're not in a risk on world right now. When risk on returns, yeah, I'm back in the game. Okay? I got knocked out, what was it, last last Friday, so I've been out of that Euro Turkish lira trade. I made no pips, but I made 930% return on investment. But I don't go back. I don't just keep selling to get back in. Like, why would I do that? We're in a global risk-off environment. Why would I buy lira? That's risky. People don't want risk right now. Okay, so, but we'll see. We'll see. Maybe next week, right? Maybe next week, but we're not quite there quite yet. Okay? And remember this opportunity that you have. Everyone around you is probably in some form of panic. And if you're 60 years old and you have a retirement account and you just lost 25% of it, that means you might not be able to retire at 65. You might have to work till you're 70. This is a big deal for many, many people. Having this opportunity in front of you, this thing called Forex, is going to probably save you years of working. You could retire years and years earlier, and while being retired at 62, 65, 68, and 70, while you're enjoying your golden years, you can continue to trade to have income, because you can't just throw your retirement account into bonds and earn and live off the income from bonds. Bonds don't pay anything anymore. So now you can take care of yourself. Maybe have a little left over to take care of others, right? When it's your grandchild's birthday, you're the best grandma ever. Because you have control over your destiny. Meanwhile, grandma next door is eating cat food. Because she can't take care of herself. She was never trained. She never had the opportunity. She doesn't have the knowledge. You do. Best grandma ever. Thank you all. I'll see you on Monday. Thank you for being on my team, being here every day. Please like, subscribe, and comment. You're simply telling YouTube this is good quality content. Thank you. Would you do that, please? Only 70 people out of 200 click like, so the vast majority of people didn't like this content. Oh, amazing. Take care, everybody. Click like, man. Click like. Click a like.